All right, folks, welcome back. It feels just like yesterday, last time we spoke. All right, so here we have one of those instances where, as luck would have it, the hands of fate, the planets aligned, all those factors came in on something I gave you in an analysis last night. Now, before you start snickering and rolling your eyes and sending your husband up to slap me on stage, just understand that this is just one piece, one little piece of price action in the delivery that the algorithm will likely, not every single instance, but it will likely repeat. Okay, it's the logic that I've shared on this YouTube channel, and I've been asked, obviously, if you read the comments in the videos, can I show an example of this working in London session for Forex? No problem. To do that, I set the stage with the analysis last night. There are folks out there that will say, I don't know how to pick the tops and the bottoms or the highs and the lows of the day. They don't know what I'm teaching, so it's easy for them to say those types of things. And a new student may stumble upon their comment, may stumble upon their YouTube channel, and whatever their medium is, they follow that logic without investigating it or looking into whether or not these things that I claim are true. So, without a safety net last night, I outlined it for you. I explained what it should do, why it should take place, and therefore, we watch. And do I see in my chart, like you should see in yours, what I outlined? Not exactly to the level I was outlining, but the general premise was there. And what do I mean by that? Well, we were in this area here, and I mentioned that I felt that it was going to go below the 100 level. And if I were making the market, in other words, if I was the market maker, providing the parameters at which the dollar index will go down to set up a buying opportunity, I would take it down to the 99.92 level. Okay, and you can check me on that with the video I uploaded, and I can't edit a video on YouTube. Once it's there, it's there. Okay, so I know some of you are actually downloading them. That's fine, but go to episode 19, which is the one I just did last night, and listen to the 20-minute mark around the 10-second in that vicinity, and let it play for a minute or so, and you'll hear me outline the very thing that you're seeing in your chart right now. So the question is going to be, how did I know to call that level, and why did I know that it was likely to set up a London setup? Well, I'm going to teach that to you tonight. So understand that this is not the model for my daughter. This is not in addition to the model. I'm just simply answering questions, okay, because I got a lot of them, and I'm not trying to push this inside of the model for this YouTube mentorship, because the next step is going to be, can you go into London and do live sessions so we can copy what you're doing? I'm not going to do that, okay? Now, some of you are going to be upset and say, oh, well, see, you're not proving anything. Well, if you're not seeing this as proof, move along, okay? Just move along. I'm only going to do what I'm willing to do, okay? And I'm having fun showing what I'm showing, and it's really enough. Only those individuals that want to be spoon-fed setups and trades and piggyback my ideas, they're the only ones that really push and twist my arm, and they're going to be frustrated. So I'm just letting you know that's not going to happen. So don't ask. I don't care how many times you present it nicely in a comment or request. It's simply not going to happen. It's important for you to go in and find these setups on your own using what I'm teaching. So I mentioned that we would drop below that 100 level. Why did I pick the 99.92 level? Okay, well, if you look at the price action right over here, okay, we had this run up at the beginning of that candle right there. Just draw that out in time. I gave you about 99.95, 99.92 level. Okay, that small little range of about 3 pips. That's what I was eyeballing last night. Now, I was talking to you, obviously, before midnight. Now, there's things that I teach and have in my repertoire that helps me fine-tune the low of the day, and I'm not going to teach that here, and then, because I have a community, obviously, I'm obligated to. I'm not obligated here. Okay, so I don't want you thinking you can guilt me into doing more than I'm already willing to do, but just know that there's things that I can basically use at my repertoire at midnight that will help me fine tune the actual low within about 2 to 3 pips. Sometimes right on the very low, but it's not needed. Okay, the idea that I just gave on the fly last night when I was doing the commentary was really simply just rooted on the idea of this extension and ending it right on that candle's high and just eyeballing it. So that's what I was looking at. I expected it to drop down. I'm not convinced that we're going to see this top yet. So I felt that it dropped down here. And also, being a setup going into London, that's what I would expect. And I'm going to teach you how to use that information if that's what you want to investigate and study on your own. But notice that we ran up above these relative vehicle highs, and that's what we ran for the intraday price action target. So the high of the day that was set initially around the midnight time frame, it dropped down, creating the entire run lower, creating the London low real close to where I was outlining it. Not exactly, obviously, but it's good enough for government work. And the market starts to rally and it takes out the initial high of the day. But more specifically, it aims for these really clean levels. You have this high here, here, and here. Remember I was teaching, just like this level here, the market does not like to leave that. That is not efficient. Now, it's efficient for technical analysis, Retail 101, where they'll see that as resistance. It looks perfect. That's what they want because the books teach that. The books are meant to trip you up. It's flawed logic, folks. I mean, I hate to say this type of thing to certain individuals because they take aim at me like I'm trying to belittle everyone else. It's not that I'm trying to belittle anyone else. I'm trying to shake you by the lapels and simply say, look, listen to what I'm saying. Don't believe what I'm saying. Investigate the things I'm stating in the video so that way you can come to your own conclusion. Either I'm making things up or there's really logic behind it. And you can dismiss 99.9% of the things out there that everyone looks and relies on to have in your charts as far as analysis concepts or indicators. You don't need all that stuff. So if I'm suggesting, as I mentioned last night in the video, that we would drop down here and then start to go higher, that sets the stage for what? If this is going to be a point at which it reacts and goes higher, as I was outlining around this time period in the video, that means the opposite should be seen for Euro. But before we get into that, let's fine tune this a little bit more on the 15-minute time frame. You can see we dropped down, creating the low of the day in London Open. That's our kill zone that I teach here on the YouTube channel. It's 2 o'clock in the morning to 5 o'clock in the morning, New York local time. So if you are using the time window thing over here, set it to local New York time, 2 o'clock to 5 o'clock in the morning. That's the kill zone for London Open. Market comes down, creates the low of the day, runs back up, back into an order block here. I'll let you look at the lower time frames and you'll see that is in fact an order block, an optimal trade entry, and the market starts to create its run up into the relative equal highs, sweeping that as a daily objective. Now, if this is the low of the day, and if it's what I've outlined in advance, and you see that last night beforehand, this is what I expected to see price drop down in and then start to go higher. At the same time, Euro runs all the way back up to the previous week's high. How is this likely to be a false breakout? We have to use intermarket relationships like I'm showing you with dollar index. So if you're trading Forex, it's important to relate your analysis in the trading market. Okay, for instance, if you're looking at Euro, that's your trading market. You have to have a barometer, something to measure its movement with. And that's intermarket relationships. So having that with the dollar coming down to a level I outlined last night, that it would be a bullish area, it'd be a sensitive price point to see an advance higher. Because its relationship with Euro, it's inverted. So if dollar is going down to that level being 99.92, then it's not a surprised to see euro rally higher as it's doing that. But what is the euro reaching for? This high, and it went so far as to go up above the previous week's high. So they really reached up in there, took out the previous week's high, and at that same instance, right there, that's when the dollar hit the objective I told you last night. That would be a buying opportunity for dollar. If it's a buying opportunity for dollar, then it's a shorting opportunity at that very moment. Look at your own charts and study the moment it hits this level here. It's the same moment that the dollar index is hitting that area I was outlining last night for a buying opportunity for dollar. So this is a false breakout because my analysis was done and shared with you openly that would be a buying opportunity for dollar. Setting the stage for what? As I outlined, I'm bearish foreign currency. Could I have bought that? Sure. Because I'm expecting the dollar index to drop down to that 99.92. Did I? No. I went to sleep. I was tired. So I'm not concerned about that. I didn't take the short either. I don't care. I don't want to be in every single move, and I'm not trying to trade Forex right now. But to prove to you folks that are sitting out there asking to see if it can be done in London, does the concepts work? Can I call a move? Can I give an idea? Can I do these things before it happens? Yes. But simply because I can doesn't obligate me to. Okay? I'm not here trying to perform magic tricks for you. Okay? I'm not trying to do that. I'm trying to teach you to trust your own analysis and lean on your own experience, even in the early stages when there isn't that much of it. It's okay. You learn to grow gradually. All right, so the 15-minute time frame, you can see that the euro went up into its kill zone here, 2 o'clock in the morning to 5 o'clock in the morning, New York local time. So it creates the high of the day. So in this price run, we're going to start stripping it down. And I'm going to make it very easy and not make this video very long, but I'm going to jump right to a very small time frame chart. 2 minute has the very clean fair value gap. So after it ran above that old weekly high, the market trades lower and takes out that short-term low. Now, some of you might see this short-term low and say, well, why didn't you use that low instead of this one here? Well, the reason why is the fair value gap forms right here on this candle. Once that candle closes, the very next candle, it opens essentially right at that low. So it hasn't really moved away and it hasn't really shown me what? Displacement. Something energetic where it moves away from that fair value gap. That's the important factor. So we have the fair value gap here, and then it moves lower than that short-term low. Now we have a shift in market structure. The market could have came back up into this run here and offered an entry there, but it didn't. Notice that. It went a little bit lower. That's fine. And then rallies up to that level here. This is the entry point. Now, think about where your stop loss would be and think about where your entry would be based on what I taught you using the New York session. This is an opportunity to pause the video and think about it before I show the annotations. You're smirking, aren't you? Thinking, I'm not pausing it. So you just might as well get on with it, ICT. Okay. So here we have a zoomed in 2-minute chart. And here is the fair value gap level that you would be putting your limit order in. So it gets filled essentially right there. Remember, it's not going to be placed in the marketplace for a shorting opportunity or entry on limit anytime in here because it has to move away from the fair value gap. So it does it on this candle here. So we have that run through this short-term low. We have displacement. It was an energetic move lower away from the fair value gap. It doesn't get to it here. It goes a little bit deeper. We wait. We don't chase it. We don't go in here thinking, oh, well, I missed the move. We still have time. See all this over here? The kill zone for the London Open is still open. So we allow for that retracement higher. Your fill here, maybe 1 pipette, maybe a half a pip, or maybe a full pip above this candle's high. That would be your entry, but we're just going to use the actual candle high. That would be your limit order entry, hypothetically, 1.0924 and 4 pipettes. That's your entry. Your stop loss will be above the high here. That comes in at 1.0936.5. And the heat or the drawdown that you absorb, hypothetically, if you would have used that entry point, is 1.09301. So basically, not even 5 pips. Okay, so, about 5 pips, around about 5 pips of drawdown. So essentially 25, we'll call it the 30. So call 5 pips. There it is, done. So 5 pips of drawdown and never came to your stop. With this gearing, okay, if you use sound money management, how much can you risk if you're risking $1,000 per trade? Okay, you're thinking about money-wise, don't do that. You think about it in terms of fixed percentage risk on equity. So that means you're simply going to look at how much money you have in the account, take that, times that by 1%. Okay, 1% is the maximum. Preferably, you should be doing a half of 1% or maybe a quarter of 1%. You're learning. You're not trying to do a lot in the beginning. You're trying to just simply trust the idea of seeing these moves. None of you should be going into demo. None of you would have done this, obviously, because we're talking about it in hindsight. But I'm showing you the relationships of how when the market went to this level here and cleared the buy stops on the previous high on euro, that's the very moment that the dollar index went down to the level I outlined. It would be bullish. So the teeter-totter effect, or the inverse relationships, that if the dollar is going to go higher, that means that it's going to have weight introduced to euro, and it should start to go lower. So your entry here and your drawdown and your stop, all those being what they are here. If we go out a little bit further, and I'm just using a 5-minute chart so I can put everything in the fractal. In other words, the fractal is this move up and then down. That way you can see it all and have the candles still be clean and have everything on one chart. So it's the only reason why I'm showing the 5-minute chart. It's not that I'm doing anything special with it. Okay, it's just to show you the overall dynamic of this price run up, the rejection, the optimal trade entry that would be used with the fair value gap used on the 2-minute time frame, all the levels and things here being as they were on the 2-minute chart. And if you did a Fibonacci run from the low here, why this one? Because it was the most energetic starting this price run here. That would be your parent price leg. 50% is around in here, so that would be a nice objective initially. That would be your first target. If you're going to hold for the full day, it could go down to this area here, and lo and behold, we have that imbalance. It trades right into that rather handsomely. So there's your example using it. I gave you the framework beforehand. I told you what to expect in the dollar index, and everybody should know that the euro is going to be the opposite direction of whatever the dollar is going to do. So hopefully this has been insightful to you and you got something out of it. Until I'll talk to you next time, next week, next Tuesday actually, Lord willing. Enjoy your weekend and be safe.